and affordability and options for financial products, which the bank is going to be the most important that we're going to use. Rental housing, because with rental, how you pay your rent on time will also affect your credit, and especially when you go to apply for a mortgage loan. Utilities, with utilities, if you pay your utilities on time, then you won't have to pay a security deposit when you transfer your utilities for that new home that you're purchasing. It helps with cell phone plans, insurance products. With insurance, people don't know that there's A, B, C, D, and E ratings for in homeowners insurance. They do rate you on your credit. For access building and wealth. Okay, I keep getting something else. And as far as employment, so most banks or federal jobs, they also pull your credit to determine whether they're going to hire you or not. A lot of people don't know that. So building credit, saving money, financial stability, and home ownership, which that's the goal we want to get to. So what is a good credit score? I would say anything over 620, you're getting there. But 720 is considered A plus. When you're in the 800s, I always say your word is your bond, and I rank you up there with the Lord because your word is your bond. When it talks about poor credit, this subprime finance agencies with that subprime credit. Fair credit is near prime. It may be eligible and reasonable or good rates and terms. And then co-signers or deposits may be required if you have fair credit. If you have good or excellent credit, then you can get the best rates, and that determines how much you pay for your mortgage or any other loans that you apply for. And as you can see, the range is from 300 to as high as 850. And I have seen an 850 credit score. Don't see that many, but I have seen it. And then it says too, it's based on the FICO score ranges and distributions, and there's no one score range. And as you can find out too with the different credit reporting agencies, they vary because some agencies do not report to all credit bureaus. Some have their main ones that they use, like with Equifax, like I know with State Employees Credit Union, they used to be only Equifax, but now they use Equifax as well as Experian. So why credit building? Households at all income levels rely on credit to manage their cash flow, cover expenses, and meet their goals. Access to credit can provide immediate access to money in case of emergencies. Good credit can help you reduce your household expenses and also save money as well. Good credit can help achieve your financial goals of home ownership. I had one lady that came in with a car loan. Ooh, her payments was like $599 a month. And I asked her, I said, what is your the rate on your car loan? She said, I don't know. And anytime someone can't tell me what their interest rate is, I'm concerned, because that means that was not discussed and that salesperson saw you coming and they socked it to you with the interest rate. So if you can't tell me that, then I know then that was not discussed and you found out after you signed on the dotted line. Building credit and your goals. What is the link between good credit and your financial goals? What is credit building? It increases cash flow and reduces expenses. Just like on a $250,000 mortgage, If your credit score is less than 620, you're not going to get approved. 620, as you can see, the interest rate is 5.464. The payments, 1,414. Total interest you're going to pay over the life of that loan is 258,979. If you have a credit score of 760, interest rate 3.85%. And monthly payments, 1,078, and then the total interest over that life is 1,700. I mean, 173,213. Connecting credit and home ownership. In the beginning, 560, you work on credit, pay a credit card off. 6 months later, credit score 600. 12 months later, eligible for balance transfer, reduced interest rates, and credit cards paid off. And 18 months later, you're looking at the 700 credit score. You can refinance your car. With state employees, if you pay on time for 6 months, they'll refinance your loan. So I always try to strive in trying to get those rates reduced. 24 months later, 750. Down payment saved, eligible for excellent mortgage rate. Down payment saved faster thanks to better credit. Okay, building credit post-purchase. 3 years after buying their home, Lulu continued to build her credit and was able to qualify for a low interest equity line of credit and build a carport. Then it says, Tom stopped using credit after purchasing this home, but unfortunately he had a major plumbing problem and did not have savings or access to low cost credit. He was forced to use high cost loans to pay for the plumbing repair. Next month, the added cost of the loan payment strained his budget and strained his ability to pay the mortgage and other bills. If Tom had continued to build his credit, he might have had a more affordable option available to him. But then, like in Durham, I mean, we have resources of different agencies that will help you if you have home repairs needed, but it's also too income-based. But if you build your credit, there's asset protection. So how does credit really work? With credit building, you want to make sure that you maintain active, paid on time credit. The other thing is too, if you pay your credit card off, that's fine to pay it off, just don't close it. And most lenders, they're looking at you paid on those accounts 12 months on time payments. With state employees, they look at the last 6 months. Most credit unions are a little bit more flexible. So what's an active installment account? Installment account is like a car loan. We consider that an installment account. Credit cards are considered revolving debt. Okay, what is the active revolving debt? Does not have to carry a balance. At least one payment's been made in the past 6 months, the date of last activity. And this is talking about accounts that has no balance left on. Okay, the significance of your credits, reports, and scores. What is a credit report? It's a summary of your credit history. Credit score, the risk models used by lenders and other businesses to provide a snapshot and assessment of your credit information at a moment in time. Both are very important. What does a credit report tell you and your lender? The financial patterns that reflect your stability and ability to make ends meet. Debt obligations that reflect your ability to manage emergencies and save. Assets to asset building credit that reflect your potential for financial security. Just like with your credit cards, when they give you a credit limit, they want you to try to keep that balance at least 50%, between 30 and 50%. When you get closer to your credit limit, they see you as maxing out and you doing the overuse of credit. If you want to review your credit report, you can go to annualcreditreport.com to get copies of your credit report, and it's free each year. It does not give you the credit score, but it does give you the credit report. And a lot of times when I'm working with people and getting them credit ready, and if they paid off debts, and if they want to find out whether that account has been updated, I always direct them to go to annualcreditreport.com to see if that account has been updated, especially as we get closer to applying for a mortgage loan. Review your credit reports, access and inventory. What is on the credit report? Accounts in good standing. You want to make sure those accounts are paid on time and they're looking at the last 12 months of how you've been paying. Accounts can be brought current. Old accounts can be reactivated. Delinquent debt and collections can be paid down and eliminated. As a matter of fact, yesterday I had a client that I was working with, and she had a collection on her account. We were going to do a settlement, but with this particular collection agency, they told her that if she paid the remaining balance, because she had been making monthly payments, and she wanted to go ahead on and pay that off. And they told her if she paid it off, they would delete it from her account. And that was exactly what we needed, because the last payment history on that account was for 2020. And so most lenders, they want to look at that debt being less than more than two years old before they don't look at that account. And so by them deleting it, then we won't have to do any letters of explanation, because that account will be gone. Which score? Did you know there's not just one credit score? And then the credit scores commonly used by the mortgage lending. Equifax with the Beacon 5.0. You have Experian, which is the Fair Isaac Risk Model V2. And then you have TransUnion, which is the FICO Risk Score 04. The key drivers of your credit score. The history of positive payment history on your credit accounts is most important. Credit utilization and outstanding debt. The length of credit history. Other factors mix the different types of credit, how often you apply for new credit. They do frown on you when you use subprime lenders. And when we say subprime, like beneficial, that's the other one that they use. Because a lot of times they'll grant you credit, they'll send you a check in the mail. All you got to do is sign your name. But when you sign it, hey, 30% interest rate. So a lot of times, yes, you'll get credit. And most people look at, as long as I can make that monthly payment, but it's more to it than just that monthly payment. You want to know what it's costing you over the life of that loan. Remember, scores are important, but focus on the trends upwards, the range, and the underlying actions that reflect in the credit report. And I have a pop quiz. And the answer would be either yes or no. How much I pay for financial products, does that impact your credit? Yes or no?
What was the question again? Can you repeat that?
Credit impacts you in which of the following? How much you pay for financial products? You know, we talked on that a few minutes ago. With the interest rate?
Yeah, that does.
Yes.
Yes, it sure does.
It sure
And
does.
it says to credit as far as my security deposit for rental housing. Does credit, do they look at your credit?
Yes, they do.
Yes.
Very good. And if I need a security deposit or co-signer for my cell phone plan,
Yes.
do they
Yes.
look at your credit?
Yes.
Yes, they do. And then also, does credit also affect which jobs you're hired for? You heard
Yes.
me talk about that as well. That's right, especially if you're looking at banking. I'm telling you, if I was a banker, I wouldn't want anyone handling my money if they filed bankruptcy.
I know that's right.
Not a biggie. Okay,
I'm with you on that one too.
amen. And then it says credit impacts as far as how much you pay for insurance. We
Yeah.
talked about that as well.
Yes.
Yes, it does.
Oh, okay.
All right. Have another pop quiz. Yes or no? An open credit card that you haven't used in a year.
Yes. No. No.
Okay, which one is it?
No.
No.
Very good. No, because the word was haven't used in a year.
Mhm.
And then it says two, is it active, a deferred student loan?
No.
Very good. No, it's not. Okay, a car in good standing with a $2,000 balance.
No.
Yes. Don't forget, I said it's a car in good standing with a $2,000
Oh, you
balance.
said good standing.
So
I
if
missed
there's a
the
balance,
okay.
that means we still owe it.
Oh, okay, okay. I missed that word.
Well,
My
that's a
bad.
little tricky. That's okay. Okay, what about a car loan that you paid off last month?
Yes.
No, because I said you paid it off last month.
Oh, okay, okay,
Now
okay.
the other one had a balance. Gotta listen, gotta listen. Then a collection account that you're making payments on. Is that considered active?
Yes.
A collection account that you're making payments on.
Yes.
No,
No?
because it's in collection. Yes, ma'am, it's not,
It's
it's
not
not,
active? Oh, because it's collection.
if it's in collections and you're making payments on it, it's, the issue is that it's in collections. But once you pay that off, then like I said, the lender, the creditor has the option of either saying that that loan has been paid, satisfied, or they can delete it from the account. So it depends on
Oh.
who
So
they
they're
are.
making payments
And I
on
know
it.
someone said that they want to know the 8 ways to build their credit fast. So you ready for that?
Yes.
Yes.
The first one is you want to make sure that you pay your bills on time. The current bills that you already have, you want to make sure you pay those on time. The other thing you can do too is you can ask for higher credit limits. Now, just because you ask for a higher credit limit doesn't mean you have to charge to the limit. But with that
Right.
higher limit, that'll help increase your score because you're showing that your balance is anywhere from 50 to 30% of what that credit limit is.
Okay.
And
How often would you
what
say it would be
about
okay to
Arizona?
request the limit?
What was the question again?
How often would you say it would be acceptable to request a credit limit increase? I usually do this like once a year, and but is that something that I can do more often? Or is that
Well,
that's
it
acceptable
depends.
like
Now,
once a year?
when you ask for that increase, do you start using that credit more?
No, I continue to use
Because
it the
if
same
you're gonna-
way. I just want to use a lower percentage of my credit line.
Right. So as long as it don't get you in trouble, some people are very disciplined with their credit, and there's some people that are not. But if you're disciplined with your credit, yes. Also, you want to look at any, when you look at your credit each year, you want to look for any errors on your credit report and dispute those and get those things corrected. Have you ever pulled your credit and seen a address up there that you didn't live? If you do, you want to make sure that you contact that credit bureau and get that removed or disputed, saying that you did not live at that address. And it could be somebody, try to use your credit at that address while it's up there. And then it could be somebody you did not know. I was working with a homeowner and he had 3 Duke Power bills on his credit report, and they were in 3 different towns that he never lived in. And so when we see that, what we do is I had him to go to the police department and file a police report with that on it so that we can send that in to the credit bureaus to document that he never lived at those addresses. And that's how we got that removed. The other thing too is if you have a family member that has paid their bills on time and they got good credit, you can ask them, can you be an authorized user on their card? And if you do that, you'll be on their credit report and on yours, but on your credit, it'll read A as authorized user. You're not the borrower or the co-borrower, but you're the authorized user, you're just authorized. And then for some people who do not have any credit cards, you can open up a secured credit card. And I usually ask people, if you open up a secure credit card, don't let the balance be no more than like $200-300, because with that secured credit card, you're securing it with your own funds. But you're making payments and you're just building a credit history that way with that secure credit card. And then also too, even though you have credit cards that you're not using, you want to keep them open for, especially until you can buy your home, because they want to see that you know how to use credit in a responsible way. So that is my presentation in regards to building credit. And most of my information that I got that from Credit Alliance, another nonprofit agency. So I want to give credit where credit is due. So are there any more questions?
Angela, I was trying to write down your
Yes, ma'am.
I tried to write down your 8 ways to build credit and I got to 6. Did someone else hear something that I missed? I got pay on time, keep balance low.
Yes.
You can get a higher credit limit, but still keep
Credit
your
limit.
balance low. You can be an authorized user. That's a great way to help a young adult build credit or a new person credit. You can get a secured credit card, but keep your balance low. And keep your credit cards open. I must have missed a couple things.
Yeah, you missed one, and I apologize. I missed that one myself, to make frequent payments on your credit cards or on your credit, just like it's due monthly.
Oh,
But
right.
if you want to send in 2 payments, that also helps increase it.
Yes.
Make frequent payments. We call those micro payments throughout the month. And that way
Oh,
you'll keep your credit card balances down and improve your credit.
Okay, Max.
okay. So that's 2 things. Use the credit card every month and make extra payments.
Well, I didn't say you have to use it every month. I just said make frequent payments every month, not use it every.
Month to
And I
keep-
always tell people credit is good. You can utilize it, just like if you use your credit card because you had a car repair and it was $300. You know that in 3 months you're gonna pay $100 a month to go ahead on and get that knocked out. So if you carry balances for a shorter period of time instead of a longer period of time.
Okay, there was a question. Is it better to pay off balances on cards each month or pay more than the minimum? Those are really good questions, Angela. Better to pay it off every month,
Mhm.
pay more than the minimum.
If you can, okay, if you can, I would. And
You
like
pay
you
the
heard me
balance
say
each
too,
month.
even if you can't pay it off, if you can't pay it off each month, as long as you're paying it off in the next couple of months, you just don't want to be carrying that debt into another year.
Okay.
Yeah, I find that it's really important to keep the balance low. And you never want to go over 50% of the limit, and 30% is better. But really, when you look at people who are building credit quickly, it's because they're keeping their balance extremely low. They're just using it to build credit with one small bill a month. And then,
And one thing I know,
oh, go ahead, Angela.
go ahead. I was gonna say, I've noticed recently on the student loan debt, a lot of them now is, even though there's no interest, it's supposed to be accruing because most student loans are in forbearance due to COVID. I have noticed that most people, their student loan, their credit limit is one thing and their balance is higher. And when I say higher, it's like $1,000 more than what their limit is. So I'm sure too that's affecting the credit at some point, or will be.
Do you want to talk some more about credit cards or student loans? Those are usually the 2 things that are complicated.
Yeah, with the student loan debt, I try to encourage people to ask if your employer participate in any type of student loan forgiveness program. And I think for Duke, I don't think they do. But I do have some clients who say that they did not know, and they asked their employer and found out they did have one. And I had one lady who worked at a hospital in Virginia, and they had student loan forgiveness. She said she never knew, and she had been there 20 years. She said, I've been there long enough, I could have had my student loan debt paid, and she was mad. So, but if you don't ask, you won't know, because it seems like that type of information is not volunteered.
I think there there is a group called Personal Finance. It's in the HR office. And I think there's also a group that helps people with student loans, both students and parents and employees. You know, anyone can get help from the personal finance. So I think they can explain the different options for paying student loans. So they're a good resource. We'll try to get them back. Because I know there's a lot of people with deferred student loans right now who may need help getting things back on payment. But I find the student loans can be make it hard to buy a home in some cases, but I think lenders are starting to maybe relax a little bit. We'll have a lender next month, and hopefully they'll be able to address how they deal with student loans.
Because I know at some point they factor it in because they do know it has to be paid. And even if it's in forbearance, I think they look at what, 1% in the qualifying ratio. Okay. Were there any other questions?
Hello, this is Iola. And I have a question.
Hello.
Um,
Yes, ma'am.
what is the, I'm gonna say a mature adult. So what are the options that are available for older people that are wishing to buy for the first time?
Now, when you say other options, because most like first-time home buyer programs is income based if your income is less than 80% in the median. So they don't base it on age, because with age, you know, there's age discrimination. Because we've had, I know years ago, I remember this 70-year-old couple, they bought their house for the first time. And that was a big deal because they both used to work on the farm. They were sharecroppers. And to know that they bought a house at age 70, that was a big deal.
Okay.
So it's not based on age, it's based on credit score and based on income.
All right. Thank you.
You're welcome. But we still want to help you. You heard me. If we can help a 70-year-old couple, we definitely can help you.
I believe
And
you
look,
could.
even if you don't pay it off, you can pass it on to your kids or will it to your kids. Because that's the other thing too that
Okay, that's
I
what I
talk
want.
about too sometimes in my counseling. Just having a will and making sure that you're, you know, after you buy your house, make sure it's protected, make sure you have adequate life insurance, make sure you have a health care product, then saving for retirement,
Okay.
that 401k and IRAs. So that's what we do in the post-purchase. We go into that. But then when I'm dealing with my couples, at some point we talk about that, or we with COVID, we've had, you know, have loved ones that, you know, have passed, and we talk about, did they have a will? And then they talk about how challenging it was that they didn't have a will and having to send everything through probate. So it's very important to have a will, whether you have a house or don't have one. If you have small kids, if you want to make sure that their family member takes care of your children, you want to make sure you have that will in place. have it in writing, because if you don't say so, guess what? The courts will, and it may not go to who you want them to.
Okay, thank you.
You're welcome. So, Ms. Larissa, I am going to turn it back over to you.
Teresa, you're muted. And Angela, if you want to hit stop share, then we can see people.
Okay, great.
So thank you, Angela, so much for those tips. And remember that Reinvestment Partners has free one-on-one home buyer counseling. And that's where we can do that soft pull of credit and look at it with you and come up with an action plan to continue to improve your credit and be ready, we hope, to get a mortgage. And we also work on savings plans and budgeting and paying down debt. So it's really valuable to get that service. And so you'll either work with me or Angela on that. And then I did put in chat the information about the Duke Department that has personal finance. And so you can book an appointment, and most of the appointments are related to student loans. And I also put the email and the phone number if you have trouble getting an appointment to talk about this student loan or about personal finance. Either one, there's choices. There's a menu of different kinds of appointments. So you'll get someone who can help you. And then if people have questions, more questions about getting your credit ready to buy a home, we will have a mortgage loan officer from Truist at our next meeting on July 8th at 5:30. And so I'll be meeting with him beforehand, but if you have any particular questions about, how to prepare to qualify for a mortgage loan, if you want to tell me any questions you want him to address, I can certainly ask him to do that. Does anyone have any questions about getting ready to apply for a mortgage?
I see one in the chat from Monica. How much would you need for a down payment and closing costs? Does a loan offer down payment assistance?
That's a super important question. So the typical conventional loan requires a 3% down payment, but you can get down payment assistance, and some lenders have that. They may offer the Federal Home Loan Bank, which is almost a grant. It's $7,500, which would usually cover closing costs. Down payment or closing costs. And down payment assistance can be used for either down payment or closing costs. And so it's about 3%. So if you were buying a $200,000 house, that would be $6,000 with a conventional loan and $7,000 with an FHA loan. That's 3.5%. So that $750 can certainly cover a down payment on a $200,000 house.
And I do want to add, Larissa, usually my counseling sessions, I focus more on credit, but this week I've been doing pre-qual based on what the income and what their debt is. And I want people to see what it is now. And then as they work on credit, then we'll do it again to see the improvements. So a lot of times people like to be motivated because they see what changes and what improvements they've been doing. So that's one of the things I haven't been doing that I'm gonna start doing, is making sure that I pre-qual based on what the current debt is and then what it is within a year or two once we finish.
Mm-hmm. That's part of the plan. We help people both set a savings goal. I usually encourage people, start with $2,000 if you don't have your $2,000 saved up already, and you can get a 15% match from one of our partners, the Community Empowerment Fund. You might want to remember that name, go to communityempowermentfund.org and become a member, and you'll be on a waiting list because so many people are excited about that 15% match of your savings up to $2,000 of savings. You can get $300, and you can do it a step at a time. You don't have to do a goal of 2,000. You can set your own goal. And then I tell people if you can get to 3,000, because even if you're putting just 1,000 down on a house, a new house, or 2,000 down on a new house, you're going to have to do the inspection. You have to pay for the appraisal. That's another $1,000 with the two of those, each about $400 or $500. And then I tell people go for that, down payment, that 3% down payment of 6,000 or so. And but there are people who are trying to get existing homes who just sold a house, and they may have more money than you, but don't give up. Just keep saving. The more savings you have, the better off you'll be trying to compete for the house that you want. $200,000 home loan. What's the ideal salary to possibly qualify for a loan with rising home prices in Durham? Are there any additional programs available to assist first-time home buyers? Oh, Kathy, I'm so glad you asked me about that. I totally forgot. The city is starting a home buyer program, $20,000 that will be forgiven over 20 years. So $1,000 a year is forgiven. If you sell your house before 20 years, you just pay off the balance out of your profit. If you, sell the house, you pay off the first mortgage, and then you pay whatever other mortgage you might have. Because these programs, they aren't immediately a grant. They don't want you to grab cash and flip the house. They want you to live in the house, so they forgive it over time. So that's a new program. It hasn't started yet. They'll start in the new fiscal year sometime after July. And there's a state program that we help people apply for. It's $30,000. It is a loan that has 0 interest and no payments for 30 years. So you can get up to $30,000 as a down payment and have a smaller first mortgage and a smaller payment. And then I tell people, just save $100 a month over 30 years. You'll have 36,000 plus some interest if you invest it.
Right.
And you'll be able to pay off that 30,000 and replace your air conditioning or whatever else you need.
Okay. Okay. Thank you.
And then Pinnacle Bank.
Oh, that's a new program too. Thank you, Angela.
Is it 75?
I think it's 7,500 as a loan. Pinnacle is, and some of all these programs I think we've mentioned are ones for people who are low to moderate income, and some are for first-time home buyers, like that 7,500 that Angela just mentioned, and the 30,000 and the 20,000 and the other 7,500. I think they're all for lower income people, but there are some programs for moderate income people. And lower income is like if you're making $15 an hour at least at Duke, that's a good starting point. I think you can go up to about 50,000. If you're under 50,000, you will probably qualify for most of the programs. And the name of the $30,000 loan, first I'm going to give you the agency. It's the North Carolina Housing Finance Agency, and that the initials are the website. So it's nchfa.com, and it's called the Community Partners. We're one of the community partners. And even though it says .com, it's really part of the state of North Carolina. Community Partners Loan Pool. And every state has a housing finance agency that has loans and down payment assistance, either forgiven or loans that you pay back. And we call the 30,000 CPLP, but look for something that says community. So that's 30,000, zero interest, and no payments for 30 years. And so Angela and Rosa and I can all help you with that application, but you do need to have a lender that works with NCHFA. And there's another wonderful program for low and moderate income home buyers, first-time home buyers, which is a tax credit of up to $2,000 a year. And when you start off, you'll be paying enough mortgage interest to get that $2,000 for years and years. It does cost a little closing cost. All these programs have a little closing cost, but it's worth it. You'll get that tax credit, will pay those extra closing costs. You'll get that the next year as a tax credit. And then the amount of your mortgage interest that you don't get as a tax credit, if you itemize, you can get the rest as a tax deduction. The tax credit is usually more money for the home buyers, the first-time home buyers. Any more questions for Angela on credit, home buying?
There was one question asking if there's an email that could be sent with the information regarding the programs.
Oh, that's a good idea. I will prepare that and get that out this evening.
Great, and if Larissa, I'm on that, I can also put that as a resource on the website.
Oh, we should do that. Thank you. I'm so glad everyone was here with your wonderful questions. Every question helps us get better. So please keep them coming.
It does. Well, we appreciate you, and you're a part of our reinvestment family as well.
And we want to know when you buy your house, and you can always come back. Maybe Angela and I won't be there, but someone will be there. You can always get help from a HUD counseling agency. Eliza, what do you think?
I think that was great. Just to make sure, our next meeting is July 8th. Folks that have signed up already, you should automatically get an email, so you shouldn't have to again. And then if other emails are going out, like we shared today, it would be helpful to have that resource of available support programs that will probably go out in a similar email. And so we look forward to seeing everyone on July 8th. Larissa, can you share again who the speaker is that day? Or you're muted, sorry.
I'm sorry. The speaker is Charlie Williams from Truist Bank. It used to be SunTrust and BB&T, and I think they use the NCHFA programs that we'll be putting up on our website. And I think they use the federal home loan grant money, but those grants do tend to run out, but they always have the NCHFA programs. So we'll put that up on Duke Home Buyers Club website. You can just Google it and you'll find all those resources. So the meeting is every second Thursday at 5:30 on Zoom.
Yes, and I'm about to drop the website link in the chat again. I had dropped it earlier with some additional resources, so you can find that information there. We're very thankful as a group of partners that you all are a part of the club, and we look forward to having you all join again. So if there's no other questions, we hope you have a wonderful evening, and we'll see you in July.
Thank you.
Thank you.
Thank you.